Okay, so I'm going to be devil's advocate here. Cellar boxing. Don't understand why everyone's jacking their tits over this. So the claims in this are no longer true. We're referencing an article from 2004. The 0.0001 or 1/100th of a penny bid-ask spread does not happen on stocks over $1, period. And again, cellar boxing is a strategy used for companies that are 1, facing bankruptcy, 2, are heavily diluted or they must heavily dilute to combat this, 3, over the market. So again, this is not relevant to our day-to-day trading with AMC and GME. I guess people are bored and looking for a reason to get excited. That's dangerous. Remember, keep emotions low. When shit gets quiet, that's good. That's what you want. I can't verify any statement in this article that's made because, again, there's no references. At times, the market will go to 0.0001 bid and 0.0003 offer. Very vague statement there. Which market? Because, again, over $1, that's not possible. Because there is a excess spread limit, which this rule actually was filed after the original 2004 post was created. It says right here that the maximum allowable spread shall be 125% of the average of the 3 narrowest market maker spreads in each security, if there are fewer than 3. Market makers in a security, the maximum allowable spread will be 125% of the average spread, provided, however, that the maximum allowable spread shall never be less than 1/4 of a point. So while I get the concern for this, there's nothing to worry about here. You can argue that the rules aren't being enforced and, pretend like this is what's happening, but there's no evidence for it. And this wouldn't even make sense to go and use on GameStop or AMC. One, GameStop's out of debt. It would make a little bit more sense for AMC than GameStop, but not at the prices that they're trading at. You cannot get these bid-ask spreads at the prices we're trading at with AMC and GME. So that's all I really have to say about it. Nothing to see here. Just a bunch of claims with no backup. And then under this, another claim that he thinks this is a patent for ladder attacks. This was filed by IEX Exchange. And it involves bilateral clearing. So again, it's easy to make a claim. It's hard to understand why that claim's not true. So naked short selling is not it's not a concern at this point. Of course, they're going to do it on a daily basis because they have to, but cellar boxing, not even an option. And again, I think we're just still jumping the gun here. We're all of this is based off of Yahoo, which has nothing to do with any proprietary market data. So don't trust third-party data vendors. Give it a week or two. Let it figure itself out before we start making posts about things that used to occur in 2004. So just saying. Just trying to be devil's advocate. Don't see anything going on here.